The following is a presentation of TFNN. Live at TFNN, the Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, the Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the September 11th, Thursday edition of the Money Masters Show. I'm your host, Steve Rhodes, and it is absolutely a pleasure to be here with you. Hope you're off to a great start of your day. Let's make sure that you and I do everything we can to get the most out of our Thursday. During the next hour, I'll give you the most I can by sharing with you extraordinary tools that help us identify where price is headed to. We'll utilize that lightning bolt pattern, that A to B equals CD. We'll look at Fibonacci expansions and retracements, Japanese candlestick charting. We'll take a look at TAS market profiles, Chapman wave patterns. We'll take a look at volume at swing points, the whole 9 yards, coming back to breakouts, or breakdowns, coming back to breakouts. And it's an interactive show. That means you can give me a call at 877-927-6648 or internationally at 727-445-1044. And together, you and I, we can go hunting for bulls and bears out there. Let's remember this. The greatest good that we can do for others is not just to share our riches, but instead to reveal their riches to them. Now, that's something to think about. Here's the deal, folks. You've got extraordinary gifts. And as Tom has coined, and he loves to say, and I like to say it as well, that's a beautiful thing. Look, it's September 11th. Nothing better than to go touch someone. So go call someone out of the blue that you haven't spoken to for a while and just tell them something that's really good that they do out there. Tell them something that you admire. That would be a beautiful thing. It is Terrific Thursday. This is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. Right now, the Dow's off 34 points. She's traded out at 17,034. NASDAQ Composite, the lead dog in the hunt out here, it's off $6, trading out at 45.80. S&P down about 3 points, trading at 19.92. Russell 2000 off about 90 pennies. It's trading at 11.64 right now. You've got gold is down $5, trading at 12.40. Silver, we need to look at silver and gold. We'll do that this hour. Silver down 25 pennies right now. Light sweet crude off 19 cents. Traded 91.48. Lululemon leading to the upside, up $6. Emerge Energy Services up 3%, up $3 and change. Wynn Resorts having a little bit of a counter trend bounce, I would believe. It's up $3, trading out at 185. Tesla up 250. Palo Alto Networks have another nice day. I think they were up to on the upside yesterday, I believe. They're trading up 278. To MySonics, that's up 28%. Hard for me to figure out where that stock is headed to. It's trading out at 951 right now. GoPro up another couple bucks this morning. Looks like that's the new Tesla. Looks like GoPro is the new sexy stock out here. If we take a look at Land's End, that's up another 5% here this morning, up $2, trading out at 42.09. To the downside, Restoration Hardware getting in on the fray, now down $3.19 off nearly 4 cents, 4% they should say. Pharmacyclics also jumping in. It's off $3 and change, 2.5%. Bit Auto down $3 and change. Alliance Data Systems off 3. Men's Warehouse down 3. Netflix off 250. Brady Corp down 265. Google off 250. Green Plains Inc. off 250 as well. Don't forget our call number 877-927-6648. Hey, let's begin the session by taking a look at gold. Now, where is it out here? I wonder if I've closed that out. I may have, maybe not. No, there we go. So we go take a look at gold. I'll take a look at the stitched together contract to give us the market profiles out here. As we take a look at the daily chart, the weekly chart. So what do we know about the weekly chart? Number one, the rising price channel, although was a kind of a, what is that, between a 30 and 45 degree angle to the upside out here. Nonetheless, that was broken last week. Of course, when that gets broken, then you start looking for, okay, where are you headed to? Well, on a weekly chart, your swing point, which you're trading at right now, happens to be the June 2nd low. That price level is at 12.41. You're trading at 12.40.30. There's a little 10-minute delay on this, so I think we're trading just slightly underneath that. You break through 12.41 out there. What's that set up? It sets up a move down into the swing point from December 30th. The top of the swing point, by the way, which you're already trading into, is 12.41.60. So any close this week inside that, says, hey, why not go test the low as long as you're down there? And it could also say, hey, what about, don't forget me, I'm an A to B equals CD pattern to the downside. That A to B equals CD pattern to the downside would give us a price projection of Johnny. Here's the number. No, it wasn't Johnny. Who was it? It was Doc Severinsen, right? He would do the drum rolls there. That would give you a price projection of about 1196 out there. Again, you're trading at 1240. Now, that's the weekly chart. Let's go take a look at the daily chart. What do we see on the daily chart? Daily chart shows a descending price channel, and price has broken through that. Now, that's not really a breakdown because it was already breaking down, right? So, but it is an area. Yeah, I say on the daily chart, more important to take a look at horizontal levels of support. And that's going to be your swing point out here from June 3rd, 1241. The continuous contract shows volume of 91,000 contracts. So, and I would have to say 90,000 contract is likely it. I would need to switch over to, let me do this here. Let me kind of go back and forth here. Let me switch over, see what the actual contract volume is today. Give me uno momento, por favor. Looks like today we've got volume inside the gold contract of 140,000 contracts. So we could be moving into that swing point with the volume. You do have a completed 1 to 1.272 A to B equals CD to the downside, but we're going to go with the swing point analysis here. You break that swing point with volume, 1242-ish. That says you're going to go down and probably complete the larger A to B equals CD to the downside, and that's in that 1148 type area. 1148 type area, 1198. What am I talking about? Around the 1198 range out there. So that's what's going on inside of gold. Let's take a look at silver, off 24 cents as we speak right now, trading out at 1868 out here. We're not going to worry about any profiles in silver. We got silver now attacking the May 30th low. That price point is $18.70 out there. I don't have the volume on the December contract, obviously, is what we're on. I can tell you volume today is so far 33,000 contracts that have traded hands. So swing point-wise, what do we know? Let me get over to the, let me put the continuous contract out here. SI, unsigned F equals 1. Okay, now I got the continuous up on my screen. Let me pull this back, make it easy for us to take a look at. Let me get rid of that A to B equals CD to the upside out here. Okay, so here's what we know about silver. Big swing point on December 31st, and it's trading down into that as we speak right now. Very interesting. Let me pull this back further. Okay, so let's put the line across the bottom of that screen out here. That price point is at $18.72. So you're trading below that right now, and this is a daily contract. Gosh darn it. A daily contract on my screen out here. So you're trading below that. Okay, so the key level now to be watching, well, this will be a doozy. The trading session from May 30th, and that's at $18.61. So you're trading just slightly above that level right now. Volume on the continuous gives me about 44,000 contracts. So it probably is about 44,000 contracts versus today you're at 34. So you could take that out with volume. And if you did that, you would set up a potential A to B equals CD to the downside out here. That's why I said it's a doozy. That doozy would give you a setup on silver, high-ho silver, out at about the $18.06 mark out here. So it looks like that's what we could be. I'll pull that back a little bit further. So that would make sense then. Okay, because that takes us then down into the June 28, 2013 lows. So if I take a look at that A, this is a small A to B equals CD. I don't know why it vanished from my screen out here, but let's go put that back in. So that's good. So that's likely where we're going to see silver head down to, the June 2013 area, and that's the A to B equals CD. Just the one-to-one would take us down below that swing point from June 28, 2013. That low, by the way, is at $18.18 out there. Now that's with the U.S. dollar index. I believe she was pulling back a bit today. Was she not? Not much, just 9 cents out here. Let's take a look at the U.S. dollar index. I'm going to switch back over in this case here to the continuous contract. Give me a moment to do that as we take a look at it and see what it. Now it has completed that 1, 2. What's the deal here? Okay. Not sure what the delay on my system is. out here, so I'm gonna have to skip that. I'll do that during a break. I'll try to grab the U.S. dollar index. So I'm not sure why the chart is not populating, but there we go. Now we're bad. Now we got it populated. It was because it was doing so much work. So what we know about the U.S. dollar index is, the U.S. dollar index still wants higher price. I believe it still wants some higher price. I believe it wants to, right now, likely wants to get up in that tag, the high of that July 9th area. Let me put this, might do the same thing as it recalculates here. Let me put this on a weekly chart and see if we can get that up on the screen. Okay, there we go. So we got the weekly chart out here for the U.S. dollar index. So it's made the 1 to 2 A to B equals CD to the upside. So it's getting ready. But it's still trading now. I probably should have left it on the daily chart. It's still trading with inside the swing point. Of course, that's not hard to do because the bottom of that swing point from July 8th, by the way, is the price level of 82.60. So you're well inside that. You got volume inside of the U.S. dollar index. Even that week out here looks like 230,000 contracts versus 184 for this week out here. So I'm going to say that looks like probably wants to get up into the 84.96. Now I'm going to switch back to the daily. I want to see where that. I thought I had marked that swing point yesterday. And let me see as I pull this back out here. So we're going to go. Come on. Looks like I may have some work that I need to do during the breakout here. Anyways, when I take a look at the U.S. dollar index on a daily chart out here, when I take a look at these candle formations out here, there's actually nothing. We're extremely overbought. When we take a look at the 14-period relative strength indicator, there's actually nothing bearish about what we're looking at here inside of the U.S. dollar index. That today could be a doji candle. That would be your first sign of potentially being tired out here. But we got a lot of time left in today's trading session. As long as we're over, let's go take a look at the light sweet crude. Let's go take a look at the October contract out here. The October contract trying to do everything it can to find a bottom at the 1 to 1.618 A to B equals CD. Could form a hammer candle today, so we'll pay attention to that. The actual 1 to 1.618 price projection on this was $90.36. Price so far, the low is $90.43. Not a bad little tool out there. No bullish sign, although today's candle, if we were to close at 91.91 or right around there, very close to that, that would form a hammer candle inside of the market. Very much like we saw inside the energy sector, the XLE, that formed a hammer candle yesterday. That hammer has been tested. Volume so far inside the energy sector is 3.6 million shares versus the push down with 10 million shares yesterday. All that going against 13 million shares to the downside. So the weakest indice, which is kind of interesting, the weakest sector inside the S&P 500 has said, not going there anymore. You know what we'll do, folks, when we get back from the break here, is we'll take a look at ExxonMobil, Schlumberger, Chevron Mobil. Let's go get a feel for what's going on inside that energy sector and a couple other stocks as well. Of course, you can give us a call, 877-927-6648. This is Steve Rhodes. This is TFNN. We'll be right back, folks.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Andy Hecht's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. The S&P bouncing its head right into the S&P futures, that is, bouncing its head right into the top of this descending price channel out here, which has been really great at containing price off of the move down off of, I'm using for the price channel now. I've got the September contract up on my screen. That's rolling over today. But if we take a look at it, I'm really using the candle that I'm using as my first candle. Body of the candle is from September the 5th. That was the candle at the 5:15 session out there. And then the next candle that I'm using for my price channel, that was, again, it's a 2-hour chart we're looking at, by the way. It was at 12 noon. It was the open of 12 noon on September 8th. And then you've got, you can use as the open at 10 a.m. on September the 9th out there. So that's running into, so that's where your real resistance is inside this descending price channel market inside of the S&P 500. During the break, I was able to go trick my system. I needed more data in there. And that was with regard to the U.S. dollar index. So if you're watching this on Tiger TV, you're going to see at the price level of 84.31 that happens to be, and this is a daily chart we're looking at. So that's the daily swing point for the U.S. dollar index that we're taking a look at, generating that 100% move out there. Let me get rid of the A to B equals CD pattern out here. So 84.31 to 84.96. I suspect what we're going to see out here is we're going to see the U.S. dollar index go spike that 84.96 level, get above that 84.96. 1.36. All that it's doing right now is a little bit of a rest. And that really correlates and that really ties right into what we're looking at as we look at the euro, right? When we take a look at the euro, which is the largest component inside of the U.S. dollar index right now, it's bouncing up a little bit this morning, but it's just really working sideways. So it's the same pattern, only in reverse, right, that we're looking at inside of the U.S. dollar index out here. So it's just working off its oversold condition by moving sideways out here, probably getting ready for its next move. In fact, if we go take a look at the weekly chart for the euro out here, let's take a look at it. And because it's not made its way all the way back into its level of support, which is down, it's not too far away, but it's really right down here. You had nice bullish candles on April the 1st, the weekend of April 1st, 2013, May 20th, 2013, and July 8th, 2013. So that, in essence, is its level of ice, its level of support out here. And so moving down into the 1.2751-ish area is really a likely move. This is a weekly chart we're looking at for the euro. That would go ahead and give the energy necessary. And the Japanese yen, which is on fire, that thing broke out a while ago. That can move, continue to move higher. That would mean it's getting weaker versus the U.S. dollar index getting stronger out there. So that should be enough to then go ahead and put that energy into continuing to move the metals markets, the price we gave on silver. That seems to be now, to my opinion, a realistic level to be looking at. And the same thing in Goldilocks. So we may be able to time this all together with regard to the moves inside the U.S. dollar index, the move inside of the euro, the move inside the gold and silver out there. There could be one heck of a lot of trades out there setting up, all lining up for a bounce. And you know what? That could include our markets as well. So let's go take a look inside. I mentioned we would take a look inside of the S&P 500 sector, specifically the XLE. So let's go take a look at that. The leader being ExxonMobil. Remember, we've got that hammer candle from the XLE that we want to pay attention to, because a break below a hammer candle says if you're long, you're wrong, and that'll be releasing. So the cool thing is 3 of the 9 sectors yesterday gave us hammer candles, and will be a real clue as to what the market's next move, because you close below those hammer candles, and they were not the strongest of the ETFs out there, of these sectors. What am I talking about? Of the sectors within inside the S&P 500, because it was the energy sector, which is number 4 or 5. You had the discretionary XLY and the building materials, which is like number 8 or 9 out there. Nonetheless, let's check in on ExxonMobil, get a feel for what ExxonMobil is doing as we speak. Right now, it's trading up 31 cents, down 0.3% out here. Let's go find out if ExxonMobil's got any support out here that we can identify. It's got a high volume bar. That's what it traded into right here. So that's what stopped it in its tracks, or appears to have stopped it in its tracks yesterday. That, by the way, that price point was $95.99 yesterday, and the volume behind that bar, it's wide-ish, not really wide-ranging bar, but certainly expanding volume, 24 million shares to speak of. It moved down into it yesterday with 12 million shares, half of the volume. So that seems to be an area of support that has not been broken. Where's and there's also not so much a breakout there. We'll take a look at ExxonMobil when we get back. We'll put this on a little bit longer-term chart. We'll see if we can find some other patterns that might be out here. This is Steve Rhodes. This is TFNN. We'll be right back.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's off 53, composite up off of 14, S&P down 6 as we speak. Back out to ExxonMobil and taking a look at the sectors, some of the stocks within inside the energy sector is what I should say out here. On ExxonMobil, this is a long-term chart out here, a long-term by going back to the July 2010 level. Tried to identify here maybe a rising price channel we can take a look at price moving back into, and you can see prices moving down towards the bottom of that channel. This is a monthly chart, by the way, that we are looking at on my screen as we speak right now. So it could find some support here in the not-too-distant future. Let's take a look at the weekly chart out here, see if we can identify any kind of... So the weekly's got the rising price channel that we had put in there for the monthly. Now, when you're generating your price channels out here, they'll be a little bit different on a weekly, on a daily, on a monthly because you're using the body of the candle out there. In this case here, I've got it set up so that it just simply, or it's automatically set up so that a price channel drawn on one chart is going to carry over to the other chart. So it's nice to put those price channels on the larger term time frame and bring them over to the weekly and to the daily. So we can see here, even as I take a look at the weekly price channel, pretty good job of picking up the bodies of the weekly charts as well. So there's some fairly significant support out here for ExxonMobil, which is which is the huge weighting inside the energy sector, inside of the XLE. The daily, and we took a look at the daily chart, I believe, out there. So on the daily chart out here, we saw that little high volume bar, and it's trying to find some support out there. So that's what's going on inside XOM. Let's take a look at Chevron. CBX is a ticker symbol, off about 0.8% here this morning, down 97 cents. Let's go see what it's trading into, if we can identify anything. It's trading back into some swing points out here, back from May of 2014. Now, yesterday was down with volume, so that was not a good scene here for Chevron. 11 million shares, and that was coming into a swing point that only had 6 million shares. So in the case of Chevron, it actually confirmed an A to B equals CD to the downside yesterday. So if we take a look at that out here, that confirmed pattern would take price to, we're going to use as our A point, the July 24th high. The B point is going to be the low on August the 5th, and the C point is going to be August the 29th. That says the 1-to-1 price projection, 119 area of the move, 1 to 1.27 to 116. As we take a look at the last time that we could find any volume out here, similar to like we did with inside ExxonMobil, to identify a level of support. Well, in the case of Chevron, that takes you back to March 21st, 2014. That's where we got our next volume bar, 14 million shares. And that price range is 115 at the low to 118. So it looks to me like with the confirmed 1-to-1 A to B, or the confirmed A to B equals CD down pattern, that is where Chevron CBX is likely headed to. Let's take a look at Schlumberger. Schlumberger being one of the stronger components inside of the energy sector. What I mean by that is this had a nice breakout session here. Wide price spread, accelerated volume. Excuse me while I put a little green juice energy inside Stevie's body out here. And that was the June 25th candle. 17 million shares to the upside. Now, I had a request from a Chris in Chicago. Thanks for listening, Chris. She was asking about a bunch of breakout patterns, and she recalls a soldier that bought Tom's book, The Art of the Timing the Trade, his first book out there. And what this individual did, all he did was identify breakouts inside of equities, and he bought those breakouts. And that's what he was doing. Chris's question was if I could, she was asking about several different breakout patterns, but I want to answer her specific question. And what he did was he used a series, I believe he used Confluence. Okay, and that's where we're really taking a look at the retracements of swing points. We're utilizing we're picking out our target areas. In this case, let's as an example, we can try to do it with Schlumberger out here. Give you an idea and what you're looking for. Let me do this. So let's delete this screen. In fact, let me actually do this, and let me clean the screen off just a bit. So let's wipe our palette clean here. We're going to get rid of the TAS signal box. So we're going to get rid of moving averages that we've got out there. We're going to get rid of the relative strength divergent pattern, but we're going to leave volume. So now we've got a clean chart out here to take a look at. Now, what he was doing, okay, and this is something that I would suggest that we all do, we all take a look at, is buying the breakout. So in this case here, he would have seen a wide-ranging bar with accelerated volume. In this case here, we're looking at Schlumberger, and you would have seen that week of June 25th. And in the case of June 25th, you would just be sitting there patient, some kind of watch list. You could set up some kind of alarm system inside of your trading application, and you would have simply put in a price level to watch of the low of at least you would use a range, the low of that bar. I say you go back a couple of bars to where the breakout actually occurred, see if it's a swing point or someplace a little bit lower. In this case here, you'd be looking at 106.85. 106.85, you can see if you go back just a couple of bars, you got lighter volume out here on June 23rd, but that was at a higher price. So you'd have to say that in this case here, the real breakout inside Schlumberger happened to be the bottom of that trading session. Now, I have no idea what news was associated with that. It doesn't really matter. What you're trying to do is identify a level level of where you should find significant support. Because what you want to find is a lot of buyers out there, and what you're looking for is institutional buyers. That's why you're looking for that wide press spread and accelerated volume. And in this case here, Schlumberger pulled back into that area with much lighter volume. The first time that it got down into that range was back on the trading session of August 1st, 6 million shares, 6 million versus 17 million shares. That's the kind of test you like to see. Then you like to see some kind of bullish reversal. Well, you actually saw that on August the 4th out there. So that would have set your trade setup. You would go ahead and use normal stops on the trade out there, and you would go ahead and get into the trade. In this case here, it really wouldn't have worked out, right, because we're now trading below that. That's why you'd have both a target as well as a stop out here. What would your target have been inside this trade? Hey, I would have used the target as the swing point up here on July 1st. As your target range inside of Schlumberger. Now, what do we have in Schlumberger? Well, in Schlumberger, one of the strong ones, one of the ones that has broken through that. So that means that these buyers out here, they don't see an interest in supporting the stock at that price level. They could have been distributing the stock up here at these highs. Probably not, but you know, I don't. How do I really know? I don't know. It doesn't matter. But the idea of trying to buy into a breakout is to not tag along as it's moving along, but wait for price to come back into that area where it broke out from. Now, in this case here, we can take a look at swing points of an A to B equals CD to the downside, perhaps, inside of Schlumberger. And here what we're looking at is the swing from August 15th, 5.3 million shares. As price moved through there, it was 7 million shares, and that was on the trading session of September 8th. So what do we know now about Schlumberger? I've got to put it back. Well, it's up on the screen here. Now we know that Schlumberger actually has an A to B equals CD to the downside versus an A to B equals CD to the upside. That A to B equals CD pattern, 1-to-1, says price ought to pull back to around 98.63, maybe 94.99 out there. Now, this is one of the stocks that really has a significant breakout. At 98.63, interestingly enough, that pulls you right back into a swing point out here from May the 15th. I would have selected that as the next stop, as the next price area for price to head down to once it broke this swing point out here from that trading session of August 15th. Always make as your target going back into take a look at the next swing points. It's from those swing points where we get those confluence levels, because what we're doing is we're taking retracement areas. Let's do, as an example, and we'll do a couple of different ones out here. If I take a look at retracements, and I'm going to come here off of, I'm going to use two different points. There's really three to select from. We'll see if any of these will work out. I'm going to come from the, well, I'm going to start off right down here. We'll start where we ought to start. I'm going to come all the way back really down here, which is, I'm going to use February 3rd, 2014. I'm going to go from that low to the high out here that we're using as our A point. All right, and what we're looking for there, we've got the 0.618 retracement level. Then the next thing I'm going to do is I'm going to use the next swing point out here. The next swing point that I am going to use is, and it's really below it's already below the 0.382, so confluence is really not going to work out on this. But let's just use as that same concept. Let's see if we can find some swing points that we have retracement levels, Fibonacci retracement levels coming together. I'm going to use now the swing point from March the 14th, excuse me, all the way to the high that was put in on July the 1st. I want to see if I can find two retracement levels that are coming together. And we're too close here with regard to the 0.618. So I'm going to get rid of that. I'm going to come up to this little swing point right. It's just not going to work on Schlumberger. Sorry, it's just not going to work. But what is Schlumberger doing here at that $98.45 level that one wants to pay attention to as I pull this off to the side? Well, what it would be doing, because you can see off that swing point that Steve-O selected here from February 3rd's low to that high on July the 1st, you'll see that's your 0.618 retracement. So you've got a 1-to-1 A to B equals CD to the downside and a 0.618 retracement. That is where your Gartley buy pattern would potentially form out there. I say potential because I don't know what price is going to do between now at 103.17 and 98.45. Volume could accelerate to the downside, and I'd say that's not your Gartley buy pattern you'd be looking for. What Gartley buy pattern would you be looking for is my question. That was a strategic question. Well, I took a little gulp of the green juice out there. That's right. I heard Chris say it's the 0.786 level. In this case here, it would be in the 92 area of, inside Schlumberger. Sorry about that, folks. A little dust ball. Anyways, that's our history inside of Schlumberger. Was that Schlumberger I looked at? Yeah, it most certainly was. Let me see. What do I have? We've got Pioneer Natural Resources. We're looking at the top 10 holdings inside here. Top 10 holdings inside of the energy sector. Let's go see what Pioneer Natural Resources, the only one that is in the green out here. Pioneer Natural Resources broke a swing point from August the 14th. There was 2.8 million shares. It did it with 1.6 million shares. So this equity here is pulled back into a sign of strength. So let's go mark that on the chart out here. Let's go put the horizontal lines out here. Signs of strength, signs of weakness, very easy to detect on a price chart. What you're looking for is you're looking first at the volume bars down below. And then you're looking for to see if we had a wide-ranging bar or not. Now, somebody might take a look at this candle session here on May the 7th and see only a small body. And they would be correct. It is only a small body. However, you got to use your imagination, the most powerful nation on the planet out here. And the reason that you've got to use that is you want to take a look at where did the price actually close on that prior trading session. And then go ahead and color that in. That's a wide-ranging bar to the upside out here. And it was with volume. That says at 199 is and as price was pulling back in that area. By the way, let's put a line along the bottom of the screen as well. What shows up, the number that shows up on the screen is not going to be accurate with regard to the volume. It may be. That's 3.159 versus I've got 3.152 million shares. But what we can see here is as prices pulled back into that area, the first time it pulled back there was with too much volume, 2.8 million shares. 2.8 versus 3.1, a little bit too much. But interestingly enough, when we take a look at Pioneer Natural Resources, the next time down here was with less volume, 1.3 million shares. Yes, it broke through that area with 1.6 million shares. You're trading on that area right now. Remember what I said is take a look at the day where it broke out from and see if you can find a lighter volume candle out here. Well, interestingly enough, that would take us back. It would take me back into two possible candles. It would take me back into the session here a couple days earlier, which was on May the 1st. So I would draw a line across that out here, May the 1st. And on Pioneer Natural Resources, if you were one to be bullish on this equity out here, that is your breakout area between, my opinion, 191.48 and 191 out there. Now, if that level fails, what would that set up? That would set up by trying to find your next level inside Pioneer Natural Resource, your next buy point, your next breakout area. And where does that take us to as we go left on the chart out here? Well, it becomes very evident where that would take us to. You've got this gap that is open out here. We're going to go ahead and draw lines on our chart out here. That gap was formed on, let me just put them in here, between and you had wide-ranging bar, accelerated volume on August 1st, 2013, 4.2 million shares. That price level is 169.51 to 156.92. Yeah, kind of a $13 price range out here. You probably can shorten it because we have seen price get into the gap. So you've got some swing points down here to gauge off of, and that's right around the price levels of around 164. So if Pioneer Natural Resources breaks through the current level of support out there, then you're likely to see it move down into the 169 area. That's why you use stops out here. What we don't know is what the stock is going to do next. What we do know is you want to try to identify areas to either buy or sell from. So you either want to find areas where stocks have broken down, let them come back to that breakdown area, and then continue to move down. And you can use all kinds of patterns out there, just as we were using the pattern inside of the ES Mini to use as a gauge out here, using just simply a descending price channel. It becomes a logical area of resistance. It had worked in the past. If you see it close above that area, then what that tells you, in this case here inside the ES Mini, if we see a break above this descending price channel, you might have a breakout. It might say that the move to the downside would be over for some period of time out there. But that is not the pattern that's in play as we speak right now. Okie dokie. Hey, this is Steve Rhodes. This is TFNN. Right now, we've got the Dow trading off about 70 points. The composite down 22. We'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days, unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow's up 71. S&P is down about 8. NASDAQ Composite up 21 points as we speak right now. Let's go check in on the XAU out here, see what it is doing. You know, we took a look at gold and silver contending well in the case of silver. Things look pretty bad out here. In the case of gold, in the case of the XAU, the swing point in gold that we have been looking at is in the May time frame, June 2nd, May 26th for the XAU. Now, the cool thing here is that with regard to the mining equities out here, we're not seeing, the XAU has not gotten back to that level. I suspect it'll get back there. If we take a look at its retracement, we'll take a look at two of them. By the way, we'll come off of the May 26 low to the high out here on July 7th. You're seeing right now you're trading right into the 0.618 retracement level. If we come off of the we come all the way off of the low out here in December of 2013 up to the high that was put in actually back on March the 10th. What we will see is a lot of lines on Stevie's screen out here. You'll see that 0.618 area is at $90.30. So we're at an area where it could find some support out here, one could argue, but I'd say not really until we see gold and silver bottom. If we take a look at a couple of mining equities, specifically if we take a look at Rand Gold Resources, GOLD, is its ticker symbol. And we see how it is specifically trading. It's making its way down into a, let's pull this back just a bit. Let me see what we've got here volume-wise. So it's making its way down into a gap that thus far has held. Looks like it's probably going to make its way and try to test that area. That's right around $73.20 out here. That's a little breakout that took place on February the 10th. Now, you're trading down yesterday with 2.3 million shares. Oh, not good. 2.4 million shares today. But that's, not good. Because you're going into 2 million shares and 1.7 million shares and even 5 million shares. And we've only been trading for an hour and 26 minutes. So, so far you've got a little bit too much volume inside of Rand Gold. And what we can see here is this pretty strong equity. Pretty strong equity, but it's got some volume as it continues to move south out there. If we take a look at Gold Corp, GG, take a look at its ticker symbol. It's trading right now inside its, it's close to its swing point, but it's trading into a day that had 24 and 34 million shares to the upside. Yesterday had 22 million shares. Again, that's too much volume. Until today, already 17 million shares. So what are we going to see here? We're going to see the level get tested from June 2nd. And we'll see if that area can hold. That's 2268 to 2355 out there. Let's pick one more. Let's take a look at the XLE one more time here. Let's go see if that hammer candle has held inside the XLE. That's a weekly chart. Let me put the daily chart on my screen out here, and then we'll just summarize. Yeah, so far the weekly chart has held that hammer candle. Very, very interesting. So what are we going to look at today? Look, the key level here inside, in my opinion, the key level to be watching is going to be the NASDAQ. It's all about the NASDAQ. It is all about the NASDAQ, and when it comes to the NASDAQ, watch the NQ. Watch the price of 4,058, 4,053. You see it close below that, and then we will see much lower price in the markets. Otherwise, you'll see the markets bounce off of that level because the bulls have found that to be a nice area to start buying from. So we'll see how the market responds. 4,053.40 to be specifically. But hey, folks, it is Terrific Thursday. You know what that means for you. We're going to go out to the ocean. We're going to go ride the Chapman wave. So get your boards all waxed up, because there's some good waves out there. And then we're going to go to our man Larry Pesavento. Of course, he was riding some waves, I think, down the streets of Tucson, Arizona. Unfortunately, he got hit with those big flash floods. Then we'll go to Daryl Martin, David White, the Tom O'Brien Show, and don't forget Andy Heck from 5 to 6. Have a great Thursday, folks. Let's not forget it is September 11th. Say a prayer for supper. We'll take care. See you tomorrow.
You've heard Basil Chapman on the air as the host of the Tiger Technicians Hour, and now's your chance to spend a full day learning his trading methodology, the Chapman Wave. Basil has taught thousands of students his trading methods over the years, and on Friday, September 12th, he'll be hosting a one-day online Master Trader Series class. Included is a month of his daily newsletter, The Opening Call, a $128 value. Basil will cover a variety of topics and techniques that he uses when looking at key charting patterns that repeat consistently in the market and that you can add to your trading methodology. You have access to the full 8-hour archive for a period of 30 days, as well as availability to ask questions of Basil in the month following the course as you practice what he teaches in this full-day Master Trader class. For all the details, visit TFNN.com and sign up for Basil Chapman's Master Trader class on Friday, September 12th. Reserve your seat today.
This is TFNN.